19.4, we're going to talk about disposing of plant assets. So we have two learning objectives. You need to be able to record the sale of a plant asset for book value, and you need to be able to record the sale of a plant asset for more or less than book value. Selling a plant asset for book value, we are going to increase our cash for what we receive. We're also going to decrease our accumulated depreciation and decrease that store equipment. We have to get rid of that equipment that we have. So on January 2nd, year 5, we received cash from sale of a shelving unit, $500. The original cost was $8,500. The total accumulated depreciation through December 31st of year 4 was $8,000, receipt 543. So we're receiving cash. We're going to go into our cash receipts journal. We're going to we're going to debit cash for $500. We're going to debit our accumulated depreciation of $8,000, and we're going to get rid of that store equipment for $8,500. We're going to credit that. So when we add our two debits together, that will equal our one credit. We also need to complete the section 2 of our plant asset record sheet. So first we're going to pick how we got rid of that shelving unit. We sold it. We sold it on January 2nd, and then we also need to put in the disposal amount, which was how much we received for it. So that was $500. We also need to record the depreciation expense. So it says on May 1st, year 5, we recorded a partial year's depreciation on a desk that we're selling. So we're selling that desk. It hasn't depreciated for that full year, but we still have to record the depreciation for as long as we've owned it. So we're using memorandum number 72. So we figured out the depreciation to be $100. So we are going to increase our depreciation expense for $100. And we are going to increase our accumulated depreciation then of $100. That's going to go into our general journal. So May 1st, we debited depreciation expense, we credited accumulated depreciation. Next one, we're selling a plant asset for more than book value. So for this plant asset, we're receiving $850. Our accumulated depreciation that we're getting rid of is $1,300. The store equipment that we're getting rid of is $2,000. So when we look at this, our debits and credits do not equal. So here, we're going to have a gain on plant assets. We're gaining $150. So we're going to credit that. It says on May 1st, we received cash for that sale of desk. We're receiving $850. The original cost was $2,000. The accumulated depreciation through May 1st was $1,300. We're receipt number 582. So we're receiving cash. We're going to go into our cash receipts journal. We're going to debit our cash for $850. Debit our accumulated depreciation for that $1,300. We're going to credit store equipment for $2,000. Now again, we see debits and credits don't equal, so that tells us we need another credit. Here's our gain on plant assets. We're going to credit that for $150. Again, after we do that, we need to fill out the plant asset record sheet, section 2. We sold the desk on May 1st for an amount of $850. Now, there are times where we're going to sell a plant asset for less than the book value. So the decrease in equity that results when a plant asset is sold for less than book value, that's going to be a loss on plant assets. Now, we're receiving cash when we sell our plant asset, so we're still going to increase our cash by $200. We're going to debit our accumulated depreciation, get rid of that $3,300 for accumulated depreciation. I'm going to go down. We're also going to get rid of our office equipment for $3,800. Now here, our debits and credits don't equal again. We need another debit. That tells us that we have a loss on our plant asset. So we're going to increase that account by $300. On October 6th, we received cash from the sale of a computer, $200. The original cost was $3,800. The total accumulated depreciation through October 1st was $3,300. Receipt $645. Now we're receiving cash, so we're still going into our cash receipts journal. We're going to debit cash for $200. We're going to debit accumulated depreciation for the full amount. We're going to credit the office equipment. Again, debits and credits won't equal, so that tells us we need to debit loss on plant assets. Then we're going to fill out section 2. We sold the computer on October 6th for an amount of $200. The audit your understanding. Number 1, what is recorded on plant asset records for plant assets that have been disposed of? We need to record the disposal date, how we disposed of it, and the disposal amount. Number 2, when an asset is disposed of after the beginning of the fiscal year, what entry may need to be recorded before an entry is made for the discarding of a plant asset? We need to record the partial year's depreciation. Remember, we don't record depreciation until the end of the year. So before we sell it, we need to record the depreciation for as long as we've owned it. Number 3, what is the formula to calculate the gain or loss on the sale of a plant asset? We're going to take the cash that we received and subtract the book value of the asset that we're selling. And last one, number 4, in which account classification is loss on plant assets listed? This would be considered an other expense. Move on to your 19.4, work together.